pop it open in a minute. Well, good afternoon, everybody. I will venture to bet that nobody expected they'd hear Miley Cyrus this afternoon, so I'll take full credit for that. But anyway, my name is Chris Ulfers. I am a partner at the Jones Walker Law Firm down in New Orleans, Louisiana. Thanks to Mike and Matt, as always, for having us up here. We always certainly appreciate the opportunity to get up to New York and participate in these events. So our panel this afternoon is called Dealmaking in the Jones Act and U.S. Flag. And I think Chris's presentation just before this was a good introduction, covered a lot of the topics that we'll kind of get into in a little more detail. But on stage with me, I have Hugh Eden. Hugh is a managing director, investment banking at Jefferies, LLC. Next to Hugh is Michael Braid, Vice President, Edison Chouest Offshore, for Edison Chouest Group. Then James Lightbourn, who is the founder of Cavalier Shipping, LLC. And last but not least, Alan Ginsberg, the CFO of McAllister Towing and Transportation. So before we kind of get into the topics, I know I just introduced everybody briefly, but maybe take a minute and tell us a little bit about yourselves and your business and how it kind of fits into the Jones Act U.S. flag markets.
Sure, happy to start. Jefferies is global maritime coverage, but in recent years we've been very focused in U.S. It has evolved, right? It was more of a restructuring practice, but as the markets have evolved, those relationships grow, new money has come in, and so we've been very busy in recent years across a lot of U.S. flag, blue water, Jones Act, some shipbuilding, offshore. So across the spectrum, we've seen a pretty good clip of deals, and they should beget more deals.
Hi, Michael from Edison Chouest. Edison Chouest is a privately held organization owned by Gary Chouest and his family. We own a little under 300 vessels, closer to 330 if you include some of the JVs we have in Europe. We have 19 shipyards. I guess what makes us a little unique is we design our own vessels, we build them in our own shipyards, we own and operate them, and then we have a lot of integrated component parts that we supply. So we do the DP and control systems in-house and various other things like that. So we like to control our own destiny. We operate primarily in the verticals of the Americas, North, Central, South, but we're all over the world, including the North and the South Poles. So,
James Lightbourn, I'm the founder of Cavalier Shipping, which is my independent sort of advisory business. I've been spending a lot of time looking at the U.S. maritime sector, as I'm sure a lot of us have, given the administration's focus on revitalizing the U.S. shipping sector. And I did not expect a combination of Miley Cyrus and especially paired with my idea to bring the Great American Beer on stage is a pairing that I did not expect to happen at a Marine Money conference, but it's fantastic.
It works. It works.
So, Alan from McAllister. McAllister's a 160-year-old tugboat company operating on the East Coast from Portland to San Juan. We're either the first or the second largest owner of harbor assist vessels in the U.S. today.
Great. So to kind of get us started, I thought I'd start with a kind of toss-up question, and it obviously fits with the title of this panel, Dealmaking in the Jones Act and U.S. flag. So I think it's fortunate that we have people up here from kind of different backgrounds, different participants in the industry. So I would just ask, how do you, from your kind of own perspective, view kind of the opportunities that are out there now? What are you looking at with your companies, and where do you kind of see yourselves going in the next few years, just from the Jones Act U.S. flag standpoint?
I'll hop in first. I think I think one of the challenges is actually grouping these two things together. Chris's slide actually sort of, I think, articulated that very well in that, these are very disparate markets, and operating, a foreign-built ship with an American crew overseas is very different than U.S.-built, U.S.-operated tonnage. And I think that's one of the things that, is going to get really interesting and sort of where some of these divergences arise in the efforts to revitalize the U.S. maritime sector. And I think there's also in that context, there's non-economic actors. And part of the, sort of why I wanted to bring Budweiser on stage is, while it is the great American beer, it is, brewed here, cans made here. it's foreign owned, and some of the most active, M&A advisors up there are also foreign owned. And when you have foreign actors that might not have the same capitalistic drive that private companies like McAllister and Chouest have, and that Hugh spends his time advising, the calculus starts to change a little bit, where now you're in the realm of geopolitics.
I want to follow up with what James said and Chris said, that the Jones Act means a lot of different things. But the one comment that I'll make about what Chris didn't say is my view today is companies like OSG and now Fairwater, Kinder Morgan, in my opinion, they're runoffs. Their owners are just going to squeeze the lemon until they're dry. I just don't see those boats being built again, and worse, in competition with everything else that the government wants to build today.
Yeah. Michael, you?
I mean, some of the more recent opportunities we've taken advantage of are kind of existing outside of the Jones Act space. We acquired an ROV manufacturer in Norway, KISS Design. Prior to that, we acquired a ROV owner and service provider in the United Kingdom, RovUp. Now we've been able to, extract some value from those service lines into the U.S. market, so it can add some additional value to the Jones Act deployed vessels we operate in the market. But the points you're making are valid, and we recognize them as well. It's a different sector to extract value through consolidation. We've seen from the previous presenter's slide what has happened in the Jones Act recently. We'd like to see a little more consolidation, but it's definitely slower moving in that space. Another area we work a lot in are protected markets down in Brazil. So we have 75 vessels down there, and we have a lot of hungry capital heading that way as well. So,
Yeah, I'd say what we've observed over the last probably 5 years is the businesses, well, first of all, the sector's in the spotlight for the administration, for the economy. It's central to reindustrialization, and it has bipartisan support. And the businesses are making a lot of money. And if you look at the investors that are coming into it, there's very real money behind them. And a lot of the businesses that have historically operated in this space are undergoing generational turnover, they're monetizing at the right time. So there's a lot of new influence from very smart capital with a long-term thesis they don't need to sell, competing with long-held businesses, right? The Chouest organization is massive and vital to a lot of what the United States does, both energy, transportation, also the military. So these are very important businesses that are now making a lot of money, and you can see other investors, other buyers coalescing around, okay, how do you be a part of the next 20 years of build-out or refurbishment or expansion in that industry?
Kind of a good segue to that, and I want to go back to something, Alan, you said when we were talking last week about preparing for this panel, but and it kind of came up in Chris's slide too, but the interest from private equity in Jones Act businesses, I think you mentioned the Talavine acquisition of Don John and then Maritime Partners with Centerline. What do you make of that kind of renewed or intense or increased interest in from private equity, and how do you think that'll play out over the next few years?
Centerline and Don John are two very different animals. Obviously, Macquarie eventually wanted to offload. Centerline had in fact tried to do so several years earlier and failed, where Don John is simply a generational sale, as Hugh said. Again, it doesn't get spoken about, but a company that I know very well, American Commercial Lines, American Commercial Barge Lines, I watched them get sold out of CSX, floated, Sam Zell, Platinum, and they've lost hundreds of millions of dollars. And that needs to be a very cautionary tale, that just because private equity comes in, thinks they're going to rationalize everything, roll stuff up, doesn't always work out. I think with the smaller companies, I think the private equity is going to find out that relationships are still very important. I know that's a little hackneyed, but I think they're going to find that out. There's a very close community, and unless the other players are truly convinced that they intend to be a part of it for a long period of time, I think they're going to find it tough sledding.
Yeah, we keep coming back to consolidation, and I think and Chris's slides were again a fantastic preamble to this. But consolidation without growth is still just kind of like shuffling the deck chairs around. The U.S. maritime sector is not at this point growing despite all of the ambition of the administration and actually and bipartisan support to growing it. So the question is, when do we start building it? You know, generational sales to private equity, again, that's just changing the capital base. That's not new construction. And so I think we're still falling well short of this reindustrialization ambition if we're just swapping out shareholders.
To kind of keep building on this, Hugh, you mentioned as we were getting started that the companies in the space are making a ton of money now, and that that's attracting renewed interest. And I mean that really gets to kind of one of the key points that is listed on that program about is this truly a generational investment opportunity, or is it more of a kind of an overcapacity issue? Your thoughts on that?
Well, I mean, one example is U.S. Flag, where we've been very busy. There are only so many MSP slots. There are only so many TSP slots, although that's destined to grow. And that business, talk about relationships, and it's a different industry with different relationships, customers, military or other international customers. So I think when you look at the opportunity, if you have a thesis around the revitalization of the industry, I think buyers very much evaluate each one very carefully to say, hey, is this a stepping stone that I want to build upon? Is this touching the thesis that I want to, unfold? But there are only so many of the existing companies that can provide that access. There are only so many Jones Act assets out there of condition that might be interesting. So yeah, I think in many ways this isn't something where the international fleet ages out, it's replaced, it's the right time, you hit the market at the right time. It is a different, longer term play, and timing is everything in this industry.
Alan and James, I think y'all both kind of mentioned this, but obviously when you say Jones Act, that's a whole bunch of different sectors, different categories. But where do you see kind of the clearest evidence of sustainable demand just in the different markets that comprise the Jones Act? Any thoughts on that?
I mean, the sustainable demand is, there are just protected cabotage trades that, again, Chris had nicely teed up with Hawaii and Puerto Rico, and there's the coastwise tanker trade. But to come back to your question again, and as Chris said earlier, that's stable. That's the line you might hear often is that the Jones Act fleet is fully built out, which is true because there's no new demand. And the looming overcapacity, the elephant in the room is Hanwha ordering 10 ships, 10 Jones Act MRs, which represent approximately 25% of the fleet on the water. We've heard some of the statistics earlier about what that type of order book looks like in the international market. Now put that on a captive market that is not growing. That is overcapacity. But is that order real, or is it geopolitics?
I don't mean to keep jumping around, but another kind of topic that's been discussed, and I know Chris brought it up again before us, but is wind, right? I mean, that's another category of Jones Act vessels. And Mike, maybe you can speak to this, but do you really think wind is kind of not quote unquote dead, but where do you see that currently and kind of over the next few years?
Very stagnant. It's certainly not. It's certainly only going in one direction, as one of the previous commentators accurately reflected upon. You know, we've invested in that sector. We've got 2 new build SOVs, you know, that we've delivered to the marketplace. Now they're backed by long-term contracts, so we're isolated a little bit in that regard. But we have some ATVs under a joint venture with Maersk, which are in choppy waters, to say, at the moment. And then the long-term horizon is still TBD. I mean, obviously, very recently, a lot of the developers have publicly announced that they're no longer pursuing PPAs with the states, and they're just going to take a pause. They will retain ownership of the lease, and they'll revisit this perhaps under a new administration. But nothing is going to happen under the current administration's direction of offshore wind. It's very clear. We have to respect that. We have to continue to support our clients who put faith in us. So we'll continue with Ørsted and Equinor and the other clients that we currently service. But it's a known size of market. It's not going to grow in the next 3-4 years, and we'll just have to monitor it as the years unfold, and if there's any political change in policy direction.
Mike,
Thank you for letting me trot out one of my best lines, which is that the wind has proven to be a graveyard of capital. I got that one right. That said, even as early as this week, we're bidding. One of the only areas where you can actually maybe find assets at a discount that aren't getting bid up is in the wind sector, because people could be looking at laying them up for the next 2+ years before the merry-go-round starts again.
Yeah.
So as much as I poo-poo wind, we're a net buyer today.
if we just to double click on the wind sector one more time, which, you know, a few years ago was this big booming sector supported by the government. All of a sudden, you know, tide has turned. I mean, Michael, how will you guys think about building new assets for a U.S. government supported initiative in the maritime sector the next go round, whatever that sector may be?
I mean, we've always taken a slightly risk-off, conservative approach to building new ships. We usually build them into long-term back contracts, and this is why we're kind of isolated in the position we're in today. There's always risk in owning vessels and deploying them in whatever vertical that you trade them in. Every market's cyclical. Obviously, this is not a cyclical deviation. This is a complete U-turn on policy driven by, you know, the place of my birth, Aberdeen. They designed the offshore wind farm adjacent to President Trump's golf course. So that kind of, was the catalyst towards his disdain toward that particular offshore energy source. So I feel somewhat personally responsible for our own situation, unfortunately. But we'll continue to approach things cautiously. But we didn't get to the position we're in, and McAllister certainly didn't by never taking risks.
I had occasion just last month to be down in Norfolk. I got to visit the laydown facility for coastal wind coastal Virginia offshore wind. It's going great guns. The message is that privately financed wind projects have a chance. Government financed or state financed are much riskier today.
Very good. Okay, another topic, and again, this has kind of been touched on a few times, but the capex issues, right? And maybe Mike and Alan, just from the kind of larger company vessel owner perspective. I mean, obviously there are challenges there, right? Talk a little bit about that and kind of where you see that, how you see that playing out as the fleet continues to age into the future.
So yes, I mean, as James was pointing out earlier, and I think it's pretty clear, the growth side of Jones Act vessel operations is minimal, right? We're replacing older tonnage. By comparison to Northwestern International Marketplace, the Jones Act vessels have a slightly older average age. We have to be smart about taking advantage of the technological advancements, reduced emissions, more fuel efficient designs and component parts that provide your overall enterprise value of the ship. We need to take advantage of that and move with the times. So whilst we've been delivering some modern ships into the offshore wind space, we're also looking at where we can rejuvenate some of the older tonnage within the existing fleet. But we need to do so under some capital discipline. We're not going to continue to throw capital into projects that don't necessarily need it, if we can continue to operate ships at a higher return because they're mortgage free and they're operating the same day rate, the day rate's not going to adjust because we have a more expensive ship. The clients are they're always savvy in that regard. So as I was mentioning earlier, a lot of our current focus to deploy capitals, driven by our Brazilian backlog. We have a shipbuilding program there that goes through the end of the decade. So that's got a lot of our focus at this point in time, which kind of restructures how we can deploy things in the United States. But as technological advancements keep moving, we'll keep looking at how we can improve the existing fleet and bring new builds to the market.
So our view is completely different. We've already got 65 tugboats. And one of the trick questions in the tugboat business is, what is the EBITDA of a new tugboat? And the answer is zero, because it does is it goes into the pool and maybe ultimately pushes the oldest ship aside. So we have to continue to order, irrespective of what the price is, whether we like it or not. We have to renew our fleet, irrespective of what interest rates are. We have to continue to renew our fleet, because eventually, unlike go back to Fairwater and OSG, otherwise you're going to end up with a pile of razor blades.
Yeah.
But is that a technical requirement where you need to repower the tugs? Because we've seen Jones Act tankers that can run for 40 plus years.
We're running boats. We're running boats well in excess of 45 years. The boats today are significantly bigger than the boats that they're replacing, but that's just a function of the fact that the ships themselves have gotten bigger. You wouldn't build a 4,000 horsepower boat today. You'd only build 67, 7,000. No, that's the answer.
Yeah. So we have a few minutes left, and I'll do this now because I don't want to run out of time. But I heard this at I think a Marine Money conference last year, and I thought it was a great question. And I'm going to put you on the spot with this. But talk to me. I'll let each person address this. But what are you most excited about in your current roles, and kind of where the broad Jones Act and U.S. flag markets are headed? And then what on the other side keeps you up at night and concerns you the most?
So I think for me, I'm on the advisory side. So the deal momentum isn't stopping from our perspective. So it's been a busy year this year. A couple of things come to conclusion, some into next year, and then starting anew next year, right? So I think the exuberance around the new policy in D.C., that there's a lot to settle there, but it does inspire some confidence along with the general profitability of the industry, the general need, the thematic of reindustrialization, the maritime investment base, industrial base, I should say. So I think there's a lot of positive tailwinds towards putting money to work at returns that work for portfolios that have longer horizons. So I think we're going to continue to see that. I think what probably keeps us up is, maybe a falter in the DC support system, which takes some wind out of the sails. So I think we've seen some really strong returns from pretty much every asset class. That would inspire. Look, when you see orders made, James has his opinions on the orders, but when you see orders made, that technically means there's comfort around what the returns profile is. There's plenty of projects being bandied about with majors on specific projects. So that would indicate that investors are getting comfortable with the opportunity. But, if rates come off, if markets soften and, the capital returns are less attractive, along with less administrative support, you probably see a slowdown in that and maybe a reallocation.
Mike?
Most excited about, so Dino, Chouest, and I were out in Seoul not too long ago. We signed a an MOU with HT Hyundai. We're collaborating with them in regards to how we can deploy Tampa Ship to build medium-range shipping assets and diversify Edison Chouest even further than we are, and move into that sector. So I think that's one of the areas that we're quite intrigued about. Putting in Jones Act MRs and competing in that sector as well as in the offshore upstream side. And then what keeps us up at night is the same thing that always keeps us up at night, and it's where the macro environment is going in a contango market today. In the oil price, it's somewhat concerning. I think the IEA and the EIA continue to be more bearish than reasonable, and 4 million barrels a day oversupply next year is probably a little more aggressive than we see it. So it'll definitely be an oversupply. I think we're going to continue to have downward pressure in the oil environment, which will curtail some of our excitable motivations. But we have other opportunities ahead of us. So that's what.
About you, James?
I mean,
Other than Budweiser keeping you up at night.
No. Well, I mean, I'm generally excited that that Maritime is on the U.S. agenda again. So, broad strokes, that's what I'm sort of excited about. What keeps me up at night is that some of the actions we're seeing, I don't know how much they're actually driving that vision forward. The Maritime Action Plan that was as part of President Trump's executive order was due last week, and I thought we'd be talking about that on this panel, and nobody's seen it yet. I think the icebreaker contracts, where a type of vessel that we were restricted to only building in the United States, we're now building 4 of those in Finland, which is Finland's an ally. That's great, but is that the beginning of a slippery slope of loosening the type of in building assets in America that actually we're talking about doing? So it's I feel like Washington is a double-edged sword these days.
Al?
So I've read the Ships Act cover to cover, and you take my word on it, you will not find the word tugboat in the Ships Act. That said, I, personal opinion, don't see the Ship Act helping the company that I work for. If some of these yards do expand commercial operations, they're going to take away experienced welders, painters, steel cutters from the yards that we build at. And that's just going to raise new building prices for everyone, which ultimately is not going to be helpful to us. And again, going back to a slide that Chris put up, some of the yards that we repair ships at have designs about building, or at the very least doing naval work. And that's just going to reduce the number of yards that we can go for dry docks, which is just going to raise the price of that. I would have thought after this topsy-turvy year with the tariffs that that would keep me up at night. But here we are almost at the year end. As we say in the business, the ships keep coming. And so we've come to believe that even if there is a downturn in the economy, that the ships are going to keep coming, and maybe there'll be a slight decline, but we're not expecting anything material by way of drop-off in vessel arrivals.
Great.
Just to close, I think we said earlier that Jones Act means different things to different people. I think it's also worth pointing out that the U.S. maritime sector means different things to different people. And the 800-pound gorilla in the room that we haven't talked about that Alan just hit on is the military. Mm-hmm. And what is our scarce resource? It might be shipyards and welders. And we start saying, well, which ships are they working on? And everybody wants them to work on theirs.
Yeah. All right. Well, I think that does it for us. Thank you to everybody here for participating, and thanks for listening.